Welcome back. So, we finally got some fresh numbers from the Bureau of Labor Statistics. And if you've been sweating about prices, I've got good news.
Oh, do tell. Is the fever finally breaking?
It looks like it. The latest data shows inflation actually cooled off in November. We are officially down to an annual rate of 2.7.
Okay, 2.7% is definitely better. Where were we before this?
Well, back in September, we hit the peak for the year at 3.0%. So seeing that number dip back down is a relief.
For sure. It feels like we've been on a roller coaster, so a downward slope is exactly what we wanted for the holidays.
Now, you might be wondering, what happened to October? Why are we comparing November straight to September?
Let me guess. The government shutdown?
Bingo! Because of the shutdown, the BLS literally didn't collect the data for October, so we have a bit of a data gap there.
Classic. Okay, so let's dig into the core numbers. That's everything minus the volatile stuff, like food and energy, right?
Exactly. On a yearly basis, that all items less food and energy index was up 2.6%.
That's pretty consistent with the headline number. It shows the cooling isn't just a fluke.
However, we can't ignore the energy sector. That bill is still stinging a bit.
Yeah, looking at the report, energy posted a 4.2% annual gain. And even just compared to September, it jumped 1.1%.
Right. So while overall inflation is down, keeping the lights on and the car running is still costing us a bit more.
What about the grocery store? Am I still crying in the checkout line?
Maybe a little less. The food index rose 2.6% for the year, but month over month it barely budged, just 0.1%.
I'll take barely budged over skyrocketing any day. Stability is key there.
Lead analyst Logan Mohtashami had an interesting take on this. He pointed out that CPI inflation came in lower specifically because of rent data.
Oh, really? I know people are always skeptical about how the government calculates rent.
They are, but Logan noted that many experts have suspected the CPI was lagging on rent for years. Now it's finally showing up.
And the markets seem to like that, right?
Big time. The 10-year yield fell right after the report came out and stayed low all morning.
That's usually a sign that investors are breathing a sigh of relief. Lower yields can mean better mortgage rates eventually, too.
Let's double-click on that shelter data. The shelter index rose 3.0% year over year.
And for the homeowners out there, the owner's equivalent rent was up 3.4%.
So housing is still pushing things up, but at a slower pace than the scary numbers we saw in the past.
So, bottom line, November cooled down, we skipped October, and the bond market is happy.
That sums it up. It's not perfect, but heading into the end of 2025 with 2.7% inflation feels like a win.
I'll take it. Thanks for breaking it down with me.